We're late. Late to the party, but you know what? We brought the keg. Hi, YouTube. How is everybody out there in YouTube land? If you're just joining us, we just started broadcasting, so don't feel you didn't miss anything. Had some great price action in the opening here. We had all these wicks telling us, hey, look, bears are coming. They partied hard. Now we're right to the middle of the gap fill with a wick. We're likely to continue that move all the way down to this demand zone down here. And if we bounce there, cool, because we can actually get your fib retracements and all that stuff from this trend. If we crack that though, we can set up one hell of a bearish measured move. So stay tuned. We're going to kind of plot it out as we go. We just trade the really short-term price action because day traders can kind of make money that way. That's how we roll. Oh boy.
Slow down here. Little pause area.
Yeah, it's right about half of that gap zone. For all intents and purposes, it's kind of in the, well, written into it, so to speak. And I'm waiting to see what Tesla does when it hits this this demand zone here. That's a previous supply zone. It was quite broad. We trended right on through it yesterday, came back, tested it, broke out, finished a measured move outside of it. Now we're coming back to test it. That's kind of common when you break a zone like that. And if you relate this to my 2-hour chart, that was a consolidation point previously. So we're likely to continue into a consolidation point in this range. Leading up to earnings, we could see a breakout. And the plan for going for that 200 shot for a 50% retracement of that daily channel here, still on the table. But what do we talk about a lot when it comes to measured moves? We like to see full leg and then half legs and consolidate and then finish the leg. There are points in between this 50% retracement and this trend down here to pay attention to, and that's what sticks out to me on the 2-hour chart. There's another consolidation point right here at about $1.50. So we can kind of stripe that as a zone of interest or area of interest within range, probably this bar right here. 150 to 160, give that a $10 bill range. Sounds about appropriate.
Good job.
So if we go and conclude our consolidation in the next couple of days and then leading into the end of next week, which earnings is after hours on the 25th, we can expect any one of these things to happen. It can also come back into this consolidation zone and just sit right around that 120 level and burn up lots of theta. And option sellers, man, they've been selling the crap out of cash covered puts in this situation. Big money a week ago was buying into the call side. That's where we had everybody chasing the trend, so to speak. And then yesterday they had that announcement where like, oh man, it's a big old sweeping put order. And like a lot of the social media comments this morning in the pre-market were like, oh my gosh, my puts are going to be smashed. Da, da, da. Everyone was crying and complaining because they went and chased after that big order. They think, oh, smart money shorting Tesla into oblivion. Tesla's going to go bankrupt overnight. Can you believe in that mentality? No. The chart tells you everything you need to know. You need to ignore all that garbage and just trade the damn chart. It tells you everything you need to know. All the people talking smack about a good old Uncle Elon, I don't have to care to listen to them. A lot of data tells us that in Q4 they moved a large chunk of their inventory that was kind of building up in the sessions between Q1 and Q3. That's all. That inventory's gone basically, and now it's just going to full production mode. Try to get things under cost if you can, because inflation's going to be always trying to race you. slash prices, move inventory, it's still making margin. It's still a margin that's much better than the big three. You know, you compare them to GM and Ford and all the other brutes out there in the industry. And you know, when it comes to margin percentage, I'm a percentage guy. Their margin is actually still better than both of those guys. And FCA, I won't count because they're so multinational. It's like, yeah, they make margin, but they bully people into margin. I won't go into that. That gets too out of hand of an argument. I don't like FCA very much. I know their ticker's changed by now, but as a company, I just don't like them. They know how to make money, fine. The way they do business is not appealing to me. I don't like some of the things they do down to the boots on the ground level when it comes to their vehicles. Long story short, with Tesla, though, I think there's an earnings surprise on deck. I really do. But my thoughts and opinions, just like anybody else's, don't follow me. Don't go and take a trade based on what I say. Trade the chart. And right now the chart's telling me wait and see what happens when it hits this liquidity area. If it doesn't go skimming right through the damn thing, it'll find support here and do some things. Anyway, how's everybody doing today?
Cold.
Cold. Yeah, you're in the rainy country.
I know, right? We can't afford heat in here.
Oh yeah, that's ridiculous what they're doing for heating over there. Damn shame. Speaking of which, I wonder what UNG's doing today. Let me have a look. Amazon's just taking a hit right now, but so is everybody else. You know what? Tesla's less exciting. We'll keep those other ones on the grid. About 1080. I'm interested in this at about 950, by the way. And the reason being is it takes us back to about the 52-week low here, or even beyond that. There it is back here. Somewhere in this zone, if I expect this to bounce, I might go long on it. We've set up a nice bearish measured move. It'll take us right to about 950. If we see it bounce there, maybe we'll get a retracement out of it back to 20 bucks again. You know, natural gas is being pressured by a lot of different things right now, and I know that a lot of the garbage going on about, you know, talks of banning a gas stove and stuff like that, that's just to anger people and give them something to focus on while something else is going on. That's a redirect.
But I got a couple of good scalps.
Nice.
It's price action's killing it right now.
Hell yeah, dude. Way to be. We're right on top of that liquidity zone, right where that demand zone is. So
we're right in one from the other day.
Whoa!
We just broke through it.
Nice.
Looking for a pivot at 39.94.25 to see if it'll hold or if we're going to go all the way down there on the MES.
Right. Our Globex low there's right at the bottom of that box.
396. That would be 396.60. No, never mind. Sorry.
It was like extended.
396.44. 396.44.
Hello.
Hello.
Oh man, I just missed all of this. I've been calling out this target and I missed them all today because
them all.
Busy working.
Calls and I'm like, oh come on.
Yeah, it's like an M top on the
There you go,
5.
39.96. Bingo. 39.96.75.
Look at the 15-minute. That is a big old M top. Not to mention, it's also a triple top. But your critical support zone is going to be right in the bottom of that zone. Right at the bottom of our box. And if we break it, we've got an extension that takes us all the way down to 392.90.
Oh man, I've been calling out this divergence right here. You know,
This is a rejection of the daily 200 on the daily, I think.
Yeah.
Yep.
This is that hitting that regression, that angular resistance that we're at. We said, I think this is like the fifth touch or something.
Yeah.
We've talked about 1, 2, 3, 4, 5. This is actually 6. And so this is a rejection of that, it looks like.
This is what we're talking about. This
So
is a
the
big descending megaphone pattern on the daily chart. And I haven't even set up all the lines in it yet, but I'm getting close. When you have each impulse against angular resistance, you count them. You got 1, 2, 3, 4, 5. This is 5. We often see this. We'll get 5 just outside of the angular resistance. It'll accumulate and melt up and run for a 50% retracement of the entire pattern, which takes us to about 430, 440, that range. Or if this rejects here, we end up setting up 6 and 7, which can go anywhere in this range. We can go to regression A, regression B, God forbid, all the way down to angular support down here at like 250, 260. Yikes. That's all on the table.
2635 is my target on the ES, really, before we see a movement up.
This is kind of a no man's land of swing traders right here. We wait for the break.
Yeah, I did get a steel doji in the 1 minute, and I didn't say anything because I haven't really looked at those as much. The 5 minutes are so much better.
Yeah.
And so, and I got it, and I didn't say anything. I just went ahead and traded it.
So look at that weekly chart I just posted right there. I've been drawing that megaphone and those targets for a while now.
Yeah. So
yeah, I love it, Ironclad.
It's tough to say because if you look at it, I use divergence quite a bit sometimes for this longer term.
Oh, look, you got trend lines on the lower. That's great.
And you know what's cool about that? Morgan Stanley drew this as a descending wedge yesterday, and we're all drawing this as a megaphone. I think we're right.
Okay. No.
Yes, it's like I'm thinking this. So if you look at the price action theory of pushes of 3, right?
Right.
Right.
We still have 2 more pushes down.
Mm-hmm. That we do.
Because we had 1 push, 2 push. There's still a third push to happen, and then an overshoot. And I don't want to be a pessimist, but you guys all know I'm a bear here. Like I look at red candles is where I make money.
Oh, same.
It's
so much
I
faster.
love that too.
So we're possibly setting up a bullish measure move here, by the way, but we've had a 2-legger already. I just realized it on the 5-second chart as I was looking elsewhere. There's 1, there's 2. We can count this as 1. This is your accumulation. Critical support's the base of this control bar right here. So I'm going to throw a pivot down, 397.10. If it accumulates there with a wick and bounces, 397.05. We can set up for a half leg push, takes us back to that 397.40 pivot zone. A full leg push will take us up to 397.60. That's just taking this height, eyeball it, stack it up for a full measured move. When it gets rejected at the top, if it wants to make that impulse down to the demand zone down here again on a 1-minute chart, 5-minute chart, that's where it'll likely break over any one of these 2 pivots. And I don't have the third one drawn there. Hold on. It's 60. Didn't take it. Damn it. Hate when it does that. Gotta click it twice to get it go.
It's in the futures is so powerful. The pre-market lows, pre-market highs, It's like we just bounced at the 115 pre-market low at that 39.96.75 that I was calling. And it's just so predictable. So predictable.
Oh, yeah.
Yes, it is. And that's what makes it freaking great.
Boom. There's your breakover. Testing support one more time. Can still finish this measured move, but it's made a half leg. That was it. This is that predictability, and this is exactly what you do. You look at the chart. The chart's going to tell you exactly what to do and when to do it. And if that gets bearish again, that takes us down for a bearish measured move, possibly, back to the bottom of that liquidity box. Where's the leg info on that? That's right here.
I think for FOMC, we're gonna hit that hourly target, that 38.74 area.
Yeah, we could do it.
Is when is FOMC? Is first week of Feb?
I want to say,
2 weeks, right?
something like
Yeah.
that. We're kind of getting
2
into
weeks.
earnings mode here too, so there's going to be a lot of volatility.
Yeah.
And that's the part of the theory. Like if we're gonna melt up and recover in this market for that push to 430 on SPY, that's the time it'll happen where we'll get that volatility. We'll set up for accumulation to run that melt up pattern. But like I said, we're still in no man's land for swing traders. So it's like you can swing trade up to earnings, but you don't want to extend your positions very much past that until you get confirmation of which way this market's going to go.
Yeah. Oh boy.
But this volatility is going to be great for us day traders.
Yep.
It has been great for us day traders, and we continue to
I
prevail.
love this, man.
We're curling up on the 10-second. 5 look like.
Yeah, this is about what we do best here. Is like we're doing everything we can to show people how to stay profitable in a bear market. And this bear market's been going on since the breakover. And that was, you look back on your daily chart, we can plot that to the moment it happened, like leading back to the Big Bang Theory. 372.32 rejection right there. That was where the market tipped, and we got that trend or that channel started right there. We went right to support, regression lines here, played with that, support again, bounced to resistance, all over and over and over again. It's every wave in it. All right, so this is a bear market. Now we're at a point where the bear market can consolidate and start to swing back the other way, or it can continue to be even more bearish. We've got lots of financial headwind in the economy today, so there's lots of things that can say, yeah, this is very possibly on the table down here to the 270, 260 levels, maybe even down to 250. We've known that just by looking at the weekly chart. We can plot that right out without even any trend lines. We know there's some serious volatility in this area. And this is where that JP Morgan collar was set, and that's why. There's your big control area right there. That's what triggered this wick right here. All right. So now I'm sure they've moved it up to this level, up to about 362.87, maybe 361.50 to 362.80, somewhere in that neighborhood. Just in this area would be about where I would set a collar if I was long SPY. But if it breaks that, how low can it go? I mean, we've got all the way down here, like 320s on the table. That's insane. But the economy is going to do what the economy is going to do, and the market leads the economy. It gives you the indication of what's to expect down the road. In the meantime, we can just roll with the punches and trade the volatility, because that's what this is. This is volatility. This is smooth, bullish, quantitative easing infused, bull trend. This is volatility.
That doji on 1 minute on the MES.
Volatility pays day traders. Smooth trends pays swing traders.
5 points, Jeremy.
Nice work, man. It just comes
I
to
didn't say
fruition.
anything. I just did it. I'm sorry. I didn't want to interrupt.
I don't know. I'm just
And
over
yes,
here
it was a
blabbing.
steel doji again. It was a steel
There you
doji
go.
again.
Well done.
Watch
Bearish measure
this.
move. We're closing the gap through.
39.92 is coming. That was our thing from the other day. So
Yep.
holy cannoli.
We broke critical support, and this is the range. We could go to 393. There's one other thing to pay attention to, and I'm going to extend this thing. See if I can get it to go to 0 or close. Close enough. Hate that I can have such a hard time getting a straight line on here from a segment, but it's within a penny. That can be your second target today. There's angular here. So we've got 395.60 and whatever this was, 395 even on the table. We broke critical support. That M-top is gone.
When I realized it was that little M-top, and there were some things I got a little distracted this morning. I don't know why, but yeah, I missed that big rollover. If I'd have seen that, I'd have been telling y'all, hey, it's rolling over.
I've kind of had that off feeling today too. It's
still good. I mean, I'm still on the plus side, so that's a good thing.
Oh yeah. All right, caution, a little double bottom here on a 5-second chart. We might pull back, a retrace back to like 396.45.
But I did go negative before I went positive.
That's okay. You recovered. You waited for the next setup, cleaned it up.
Right. Yep. That's what you do. You don't just jump back in. It's like, okay, let me step back and think about this for a second.
So we do answering a question here on our YouTube channel. We do have alerts on our watch list for general swing trading alerts. We do have a day trade list. We usually will try to keep it to where we're day trading. We've got kind of a gambit from penny stocks to big caps, large caps on the penny stock watch list. It's all kind of there, and then we have a watch list for our large cap stuff on up too. They're separate, so you can kind of weed through them. Our focus in this bear market has been teaching price action trading. So like we've got mostly the ability to teach day trading and price action in order to enhance swing trading. So like you can take your price action to any time frame once you learn it and apply it to swing trading, and not only can you maximize your entries and exits using your day trading strategies, you can go and set that up on a longer term chart to enhance your ability to swing trade. And depending on your lifestyle, I mean, I was for the longest time working full time doing this. My focus was swing trading, but that was during that long trending market where it was easy to swing trade. This is not an easy market to swing trade, and thankfully I'm like full time trading now, so the day trading has been just paying the bills and handily, been a great teaching tool at the same time. So we do swing trading. We do focus on whatever the market gives us, but learning that price action, if you've got time to day trade in the morning before work or something like that, that's where we shine. We can teach you that price action trading. And then as far as swing trading goes, we've got that too. It's not the main focus right now, but it will come back. Eventually the market will start to trend one way or another, and we'll be able to either take swing trading in bearish positions or bullish positions. And options trading is the other side of that. So like it's a little bit more challenging to swing trade a bearish position if you're just shorting stocks. But when you learn how to trade risk-averse option strategies where you're not just buying single contracts in either direction, going and trading like debit spreads or credit spreads or butterflies or converting existing options positions, that's going to be your best friend when it comes to swing trading anyway. I've kind of been a part of a swing trading group on Facebook for a long time, and before I even started moderating here, long before I started moderating here. And I always said, I'm like, one, I can take my day trading skills and enhance my swing trading skills with them. Two, the natural next step for a general swing trader, someone who's just swing trading equities, is options trading. And when you learn options trading, that opens up many doors of being able to not only just swing trade the trends, you can adjust an existing position in those trends just using the options chain. You can convert a debit spread into a butterfly and lock in, a can't lose situation where you can move your working capital into another trade right away, lock that up, you can't lose. I just proved that to be very, very successful with that Amazon position. Even if Amazon, goes to zero overnight, I'm still going to make 350% on that position just because I have adjusted it. I'm waiting for the same thing to happen with Tesla. If it gets volatile enough, I can go and sell credit spreads on top of that and lock it in the same thing. Maybe I'll get less of a can't lose position, but I'll still have a can't lose position. Being able to do that with the ability to even trade simple options and convert that into an ability to trade complex options while keeping it simple, I like to call it, is a natural next step for the swing trader, and that's kind of what we focus on here. We're teaching price action, both simple and complex option strategies, and all of it when it comes to option strategies is being as risk averse as humanly possible in the market conditions. And that's why we shine when it comes to trading a bear market, because we know how to make money in a bear market. We also know how to protect money in a bear market. So yeah, if you want to check us out, I guess now the price is damn near doubled for a family of 4 dinner at Chick-fil-A, but for less than I guess a couple at Chick-fil-A, you can get a monthly subscription at $47. That's like half a date night worth of cash, to go and sign up for a month and check us out. That was a long answer to a short question on our YouTube channel. The question was, hello there, I'm considering joining. I'd like to know if you have a section dedicated to swing trading. I'm completely new to this world, thanks. And that's the thing, it's like the sky's the limit when you're completely new. And we have ways to teach even the most basic beginner how to maintain risk aversity in a market like this. That's what we do. I guess we can boast about that too. We were named best value, learning community, or best value online stock trading class by Investopedia. That is very prestigious. We can definitely brag about that. Anyway, back to price action. We've consolidated, walked that full measured move out. Nicely done. We broke our critical support from our demand zone here. That becomes a pivot, just like we were discussing before. So where's the next supply zone? Well, it's down here in this area, and I can stretch that out right into today's price action. That is our new supply zone, folks. We're on top of it. I said it again, didn't I? That's demand zone, not supply zone. Good bear trend. This is like one of those things where back when I was trading single options and scalping SPY, which I don't do anymore with straight options. I do it with spreads now. Same function, different time frame. This is one of those bear trends where you look for the pauses. You take your original entry, you ride momentum until you see a reversal somewhere significant. You take your profit off that position, and you wait until you see a rejection. And if this is going to continue in that trend, this is the pause area. And whatever you risked to get into your options position up here when you notice the break or when you took your entry, that amount of premium is what you risk going back into the chain. Same thing you paid for these options, go for these options and run it down the rest of the way. That way you've taken your original risk back into the trade while you've already profited on it greatly. This kind of move with the sweet spot of options day trading on SPY, probably pushing about a 200 to 250% profit on that move. That was pretty big if you were in the right spot with your options. Now you're looking at a free trade to go and ride that trend longer on a pause. There's your pause and break, rejection. Boom, 8 period rolled over. Quick profit. This is consolidation now right on top of a demand zone. If it bounces, this is where it will. So if you took that second scalp, this is where you're thinking, all right, am I going to take profit or am I going to ride this out? Well, this position's free. So you have a butter zone where you can get out with either a slightly smaller profit if it breaks back above this resistance here, which is 396.25. You can bail on that. Or if this breaks over as a nice clean bear flag break, you can keep riding that bear all the way down to the bottom of that demand zone. Watch that 5-second chart because it's going to give you exactly the answer you're looking for on whether you're going to stick with that or not. And currently, critical support is right here. And we're just under it. If we can break this lowest low, we're goners, and this sets up your measured move to complete the move to about the center of that box. Right on. Welcome, man. No, I love answering questions both for our group internally and for our YouTube channel. If we're going to be here, we should be able to communicate, and that's the basis of anything where it's teaching or learning is communicating. You kind of share ideas. That's what a community is all about. Everybody's quiet on our Discord server. Is Stone talking with his mic muted again? Oh, that's right. He had to take off for a minute.
Ask a quick question then, Jeremy, so if we're quiet.
Sure.
Yeah, right, you guys as a community, right, okay, you've got the chat here, and I can see Ironclad setting out price targets. I think he's on the MES. Sorry, I'm trying to switch between screens and work at the same time, so I'm trying to sort of like gather what everybody's doing. Is the whole point of getting more engaged with the channel, right, is to kind of, do you want us to sort of like put our predictions out and put them in the chat? Is that what the whole point of this is? Because obviously I'm still kind of new, so this might be a stupid question. But what I'm planning on doing again is setting up a trade. Do you want me to like call out my trade before I put it on and just sort of try and predict where it's going to go next and whether it's going to go further down, further up, go sideways, revert? Do you know, is that what you want us to do?
Well, it's certainly encouraged. I mean, we don't demand anybody to do anything, but it's essentially a community.
That's when I say I mean that's kind of it helps us become better traders. That's what I'm saying.
Exactly, and that's the whole point. Like Stone was saying, when you can take stuff that you've learned, you can put it in writing. It becomes solidified as knowledge. So when it comes to being a trading community, feel free to put your trade ideas in the chat. I mean, that's absolutely the goal, is to communicate these things back and forth. We encourage people to do their own due diligence in those. So like anything posted in there, it's not like saying, hey, buy this or hey, sell this. It's a matter of
no, that's not what I was suggesting at all.
Yep,
no, I was just saying like as an exercise more than advice. You know?
Like you've had some trades in the past, and this is why we love having you in our group, and you're very vocal and very engaging. I literally put that video out that described how to trade that 50% retracement with your call out. That was the stock you found on your own. We weren't even looking at that. So that's the kind of thing that the community's about. It's not just about us putting out trade ideas and all that stuff. It's everybody can kind of contribute that stuff, and then when we all focus on it together. If there's a chance I can get in there and break it down, be like, yep, this is the target, this is the entry, exit, all that stuff. I can walk through all that stuff. And if there's more eyes on the market and stuff that's moving, it's worth trading. The more the merrier, so to speak. We can pick up great learning opportunities as well as great trade opportunities. So like if we can go and find all of the targets in that chart and nail them like we did in that video, you're not the only one trading that. There's a lot of people going, hey, yeah, that makes sense. Cool. I do my due diligence. That looks good to me as well. I'll take that trade. I even took that trade. So, I mean, it's just a matter of, being able to spot that stuff and have it all come out together. You can feel welcome not just encouraged, but welcome to put your trade ideas in the chat.
Okay, it's even if we're beginners, we can kind of say, "Oh, I think this is going to happen." The other thing I was going to ask was, why are you not tracking the MES today? Just out of curiosity, I'm not saying, "Oh, I demand that you do." I'm just wondering why you haven't got it up on your screen. Is it just because there's better stock out there today?
I've been trading options primarily. So I've been trading SPY options and Tesla options and Amazon options, and thinking about trading some Macy's options. I'm also looking at maybe going into another bearish swing on Bed Bath and Beyond, that sort of stuff. I've been focusing on options trading for the better part of 2 months now, just to kind of get it all hashed out, and I'll go back and forth like that too. And then to boot, I had some brokerage issues with Tradeovate when it glitched out on me a few times and just utterly pissed me off, for lack of a better way to say it. I'll go back in and open and fund my account again and go back into futures trading as well. I can kind of adapt to any situation. I like trading futures as well. I really do. I was going to go and do it with TradeStation, but that doesn't, for me, that brokerage doesn't work as fast and efficiently as I was able to trade with Tradeovate, because Tradeovate is kind of a bare bones application. It made futures trading really quick. That's the one thing I did love about it. If I tried to trade my style in TradeStation, I would be in trouble because it's a little more complex. It takes a little bit more to make those trades, except for the fact that I can do it fast on my phone. So I've been kind of focused on the options market for a little while too, because I wanted to get through all of the structural stuff and all of the adjustment stuff that I had wanted to get through with options trading. Now that that's kind of in the rearview mirror, so to speak, we can go back into futures and focus there if you want.
No, absolutely not. I mean, I can see Ironclad shouting out futures targets and everything, so I'm assuming I'm not the only one trading futures today. But I was just wondering why you won't, because you normally have it up in one of your screens. But yeah,
Right.
Okay, I got you.
Yeah, I've been pretty much on idle for futures trading for a while.
No, I'm with you there. This is a fun streak.
Yes, this streak is awesome.
I had to step away.
And the options trading has been great this past almost 2 months now. It's just been awesome, the stuff I've been able to do with options. And it's not that I'm missing out on opportunities by focusing on options and getting away from futures. I'll get back to futures and do the same thing I was doing before.
I got you. Thanks, Jeremy.
Hey, no problem. Oh, nice. I wonder what the dollar is doing right now. Hang on a second.
Skyrocketing.
Is it?
Yeah, it looked like it was going to round over earlier, and then it took off. On a 5-minute chart, just the dollar DXY, it was looked like we were rounding over, and then bam, took off, and then we got the red bars.
Let me go.
Get sell off.
Look at that chart. That's got a retracement target. DXY goes to about 102.10. And we just nailed the bottom of that demand box on SPY, by the way. We're back to the halfway point. And we set up a nice little reversal on the 5-second chart. We're coming back to the 200. Looks like about 395.70 is the target. That's an extension, though, because we've already nailed 1, 2, 3, 4 control bars in that trend. 1, 2, 3. The fourth would be right at that. There it goes. Bam. But look at the descending channel we're starting to form now. We're starting to get some volatility in this. Instead of being a smooth trend, we're starting to get those pullbacks. We just made a perfect bearish measured move with a retracement right to the top of the box. Now it's consolidation time, and guess what? It's 11:30. that's about the time we'd expect a consolidation point. We to address Brady on here on the YouTube channel. I was a BB member from the beginning. The minute I bail, someone acutely streams daily. Well, we did have some changes happen internally here, and we've kind of gone back to our roots, is what we've done. We went from what would I say this? We went back to being stronger as an education platform rather than trying to go and be a shot caller, so to speak. Mainly we went back to that because it makes more sense to teach people how to fish, and that's been our root cause anyway. We're a pay it forward type of community. We learn together, we eventually trade together, and we thrive together. But above all, we learn together. Yeah, I read that wrong too. It's acutely accurate. Actually, was the word both of us were looking for. Anyway, long story short, we've gone into the education platform, and that's what we're focusing on, is putting out and putting together as much content as we can, because that is the main purpose of building knowledge, is to accumulate material based on that knowledge that we can use as a tool to teach. And we've kind of started doing this, taking a bit of our, pardon me, my voice is failing, taking a bit of our live stream that we normally do exclusively for our internal members, and put about an hour or so of it daily out onto the YouTube channel, just kind of show the world what we do inside. So it's kind of been a proprietary to the members for so long. We decided to put it out there in the public, and just we don't have to advertise or try to sell anything. We just put it out there and just show people what we do.
Got another question, right?
Sure.
When you put your trade on and you set your bracket up, right?
Mm-hmm.
Is it sometimes better just to walk away, or do you find yourself over monitoring and over trying to control the trade? Does that make any sense?
Yes and no. So, and that's the
I'm talking about
differentiation.
swing trading, not scalping now.
Yep, and that's the difference. So like swing trading equities is like considered a swing trade if you hold overnight or longer, whereas with futures, a swing trade can be like done in a couple hours, or just a slightly extensive period of time compared to day trading and scalping. So I've noticed that typically two things will happen with newer futures traders. One is that people will tend to overtrade. So yes, sometimes setting a bracket order and walking away from it is fine, but you got to realize that if there's a glitch in that app or anything happens and you're not monitoring that trade, the risk involved in trading even MES contracts can be big enough to literally detonate a small account in one mistake. So I would never walk away while I had a trade on. I would at least be able to glance at it, or if I was distracted with work, I would be able to kind of vaguely keep track of it. That's okay. I'm okay with that as long as I have my limit orders in place. But I would never consider walking away from it altogether. I wouldn't set the trade up and walk away. I've done it by accident before and it worked out great, but still, it's not something I tend to do.
I'm trying to set up a strategy for when I have to take this project on. I'm just trying to sort of think out loud. Thanks, Jeremy. Thank you.
So as long as you can kind of keep an eye on what the chart's doing and where your orders are sitting, even if you're focused on work, you can. Everybody gives their eyes a break when they're focused on work for hours on end. They'll kind of glance over at something, just look away for a split second. That's all it takes. Back when I was turning wrenches, I'd be buried under the hood of a car, but I'd have my phone sitting on top of my toolbox with a chart on it. If I was,
Nice.
monitoring a position, I would anytime I'd return to my toolbox to grab a different tool, or, if I was stuck under there for a good 20, 30-minute period, I'd glance back at my chart and be like, okay, I'm good. I don't need to exit this position. There was no nervousness in it if it was a good solid swing trade setup, but it was just a matter of I like to maximize my returns. So if I saw an opportunity where, hey, this is likely to reverse, there's a quick bout of volatility here that I can take advantage of maximizing my returns, I'll do it. That's why I like to be aware of it.
So if you see that, shifting in my favor, you move your stop loss and you move your limit order in your favor and you just modify it, but you don't like keep doing that every 2 minutes like I'm doing at the moment. Yeah.
Right. Exactly it. And that's the whole difference between over trading and being, just relaxed and confident in your trade plan.
Yeah, I'm trying to copy your behavior and your mentality as well as like your strategy, if that makes sense.
Yeah, just keeping a cool head.
Easier said than done.
That's the whole point, is to be able to just relax and not get caught up in an argument between your two other personalities in your own head. You got to be the rational one, just kind of analyzing things and keeping a cool head and already knowing what the potential outcome is the thing of confidence that gives you something to reflect on your trade plan. The original trade plan is the idea, and the argument is going to try to talk you out of that trade plan.
Yeah, your monkey brain's going to try and talk your... No, what is it? Your lizard brain, your monkey brain, and your human brain, isn't it? Your monkey brain's going to try and talk your human brain out of your plan.
Right. When the lizard brain made the plan and already knows what to do with it. So...
Yeah, all right. Yeah, lizard brain.
All right, we're testing a tweezer bottom here on a 1 minute chart at the bottom of our demand zone. This is interesting. We can set up a morning star on this very commonly, and the 5-second chart says maybe. That would take us for a retrace target of about 395.25. Let's see what happens. Amazon. I'm licking my chops. I might be able to buy back the short side of my butterfly for less than I sold it for, and then wait for it bounce and roll it back out again. And actually, today is the 30 DTE mark, so this is where time decay on the short side of my butterfly will actually start to take effect a little bit more strongly. And the long side is not far away from the price tag here, so that spread sits square. The long side is 115, 120. The short side is 120, 125. So plenty of time and space to do this. But the bottom of that thing is at 115. It's not very far from 99 bucks. And the daily chart says, I like the idea of it going to at least the bottom of this gap, which is about 104.50 to 105. Very cool. All right, so we started to roll back up into the R1 area, or H1 if you want to call it that. That was your first high after your first low. Tested a support zone, came up to it, rejected, rolled over. That was the entry for bears right there. So likely to continue down to the next pivot, which is about 394.15 on our 1 minute chart for SPY. And that finishes a complete measured move. We got here, full leg to here, accumulation. There's your half leg mark, quarter leg mark, half leg mark. Full extension takes us down to the bottom here, about 394.15.
All right, guys. Thanks for everything. I gotta get going. All the
Have a
best.
great day, buddy.
You too.
Great having you. Hopefully you did well today, and walking away now means you get to keep it. All right, 394.85 is your previous R1. See if we get a second follow through on that rejection. This is where you kind of got to look at a little bit bigger of a picture here. Think of this like you would a double bottom altogether. There's L1, H1, L2. It's at the base in an accumulation zone expected from the first leg of the measured move. And that's rejected R1 twice. Break.
Missed it.
That's your bear flag. That's how they work. It'll give you a second chance.
Yeah, I know.
They always come back and test previous support for resistance. Oh, wow, what's this? We broke it.
Yeah, this is still a tricky spot.
This is trappy. 1 minute candle. Look at this. Watch this candle. Let that close before you make a decision here. We're under the base of that demand zone. Close that hammer. Threatened to pull back up into it, but now we're breaking over. Okay. That's the second red bar in the beginning of the trend after the demand zone. So this can likely continue here, but it's being a little bit sketchy with this volatility here.
Yeah.
Price doesn't want to be here. Somewhere to our left is a control bar that we're missing.
Gotta go find it.
There it is.
Found it?
Right there, there's your base. From the 13th, it is the 10-15, 15-minute candle. Base of that is at, my cursor doesn't tell me. I think it's about 394.25, but I can't tell. I have to stretch the chart out and see what it is. 394.65, which we just broke, so there it is. All right, cool. The extension for the entire zone takes us down to 394.30. You can literally draw a box off of that wick to locate all that. That's right here. And if we crack that, that's also the 50% of this whole bar here. Likely to continue that down to the next pivot, 394. This is why we love being a bear.
I'm telling you.
So much faster than being a bull. What's the rule? Panic will sell faster than greed could ever buy. Fear will sell faster than greed could ever buy. That's it. Yeah, downside is way lower.
This is like a breakout.
Yeah.
Downward side, you know.
This is just telling you where all the short-term liquidity is, but you take that 2-hour chart and stretch it out. That is a big wick on this 2-hour candle right here. That whole zone is liquidity. It's like we could literally forget about all of these if we wanted. Just attach it to this big wick right here. That whole zone is liquidity. Kind of makes sense because it's about the same size as our liquidity zone above, or the supply zone. This becomes a big, big demand zone.
Time is it? All right, 41:46.
Yeah, we'll likely trend down to that 392 area.
Time is 11:42 coming up.
I don't even bother looking at Bookmap anymore because I can see it in every candle. And if I want to get technical, I can also see it on our daily volume or volume profile. We can go and put that on a 2-hour chart. We can see all the demand fails that zone. There it is right there, the bottom of it. And my gosh, dude, we can zoom out and see the rest of the bad news. Point of control is all the way down here if you zoom out far enough, but we want to go and just encompass this trend and let this adjust. It's still at the bottom.
$373.25. He's right. That's a pivot, Ironclad. You know that's coming up.
Take that up, encompass just the gap from overnight, and you can see where point of control is actually up here. That's been breached. Values down here, and last known all the way down at the bottom there, 394. See, we're going. I try to keep my charts as simple as possible though, but this is all going to be liquidity the whole way down. Mostly I'm trading options in for the past, gosh, this is coming to about the 2-month zone now. I tend to mostly trade futures. Doing great with it. Had monumental time with it. Had some issues with the broker I was using, so I went and went into a different broker that is actually less efficient because it's more involved into making the trades. So I was like, well, I could trade really fast. I trade on a 5 and 10 second chart with futures, and I need a broker that's like streamlined to be able to trade that fast. By the time I put together an order on this other broker, it was like already over with. My 3-pointer or my 5-pointer or my 10-pointer was already gone. So I was like, well, I need to be able to have access to a really fast, slimmed down, streamlined broker to do this. And I was for a while. I had a couple glitches with that broker that not only upset me, but one of them cost me an account. And I was at a point where I was like, you know what, I'm going to step away from futures and just go back to options for a little while. But up to that point, I mean, still, it wasn't a significant loss compared to how much I'd made trading futures in a short time. So it wasn't like, damning or anything. It was just a matter of broker issue caused me to be disheartened in it. I just didn't want to do it anymore until I found some other means. So I went to options trading, which I've been doing forever. I love options trading. I'll do options trading as long as it takes until I get back into future trading, and I'm probably going to start doing that this week. Come to think of it, I'll go back into that broker. I'll give him another chance. But I do options a little bit different from the average Joe. If you go and look at some of my recent options videos that I put out, you'll understand what I mean. And the thing is, I do with options on a commission-free broker things that people don't even consider. Like I can find some really stinking cheap spreads that just produce some crazy percentage results. And I actually have been doing it with Robinhood primarily. I will literally just take debit spreads and swing trade them. And instead of just up and closing them sometimes, I'll roll them into a butterfly that can't lose. And then I can take my capital and move it into another position and another position and another position. I'll day trade options on my Webull account because it's really fast. And that's my cash account, so I can do it over and over and over again. And even if it's under PDT amounts, I don't have to care. And I teach with that because a lot of people who are starting out, aren't throwing around a $25,000 account. You're going to be trapped on that PDT rule. You might as well go with a cash account because with day trading options, you only have to follow two rules in a cash account. One, you can only trade with your settled funds, so you don't get a good faith violation. And two, the known fact that options trades settle overnight. So you can go and trade the crap out of your settled funds one day and then do it again the next day. So you don't have to worry about PDT, and you only have an overnight settlement. That's a no-brainer. Use a cash account for day trading options. For swing trading options, Robinhood's great for that because it operates as a margin account. So you still have options that settle overnight, but if you're under 25,000, you're going to be bound to the PDT rule in that. But if you're using it for swing trading, selling options, running spreads, rotating them into butterflies, you got all the different ways you can convert an options position at your fingertips with Robinhood. It's very easy. You literally can go and pop open a menu and say, buy this, sell this, convert it into any spread you want. You can leg in, you can leg out. It's just very versatile and very fast. So you can completely adjust your position in no time. Some of the old school guys will laugh at me for using Robinhood. Everybody, and this includes the great Reddit community that's behind the Wall Street bets community there. They were really hating Robinhood because Robinhood did them dirty. They locked up their positions on AMC or GameStop or whatever the hell happened. I don't even care. But the real value in that broker is the fact that assignment on options trading, and all of the things to do with options trading have zero commissions. There's no cost involved. So what you see is what you get. So when you're selling options, you keep all the premium. Whether it gets assigned or not. When you're trading spreads, you don't have to worry about commissions on each leg of that spread. It's what you get. So when you're making like dollar-wide debit spreads trades on SPY, for instance, you go and you risk literally a penny or a whole dollar bill per spread on a SPY spread, and that position goes to be worth 2 pennies or $2, you get it all. You don't have to give anything back per spread. So like you wouldn't be eating commissions on that. You've effectively made 100% return on a $1 risk per spread. And when you start buying in large, go for 40, 50, 100 of those, 200 of those at a time is just the limit. That becomes some serious change when you're making consistent 100% returns on debit spreads. So that's where I see extreme value in a commission-free broker, because you can do stuff like that. You just can't do that with Thinkorswim. You can't do that with Tastyworks. If they're going to charge you $1 round trip per contract and you're literally in a margin of a $1 return, you might as well just burn your money, At least with Robinhood, you get to keep it because there's no commissions taking it out. The TradeZero is pretty good too. I have never used it, but I've heard nothing but good things about it. I like them. And what's the other one? I can't remember the name of it, but not IB. I forgot the name of it. It's gone. But I just stick to zero commission brokerages. It just works. And I can do a lot more with a zero commission broker than I can with a commission broker. TradeZero, that's the one.
Hey, Jeremy, could I ask a technical question real quick?
Sure.
So I appreciate your explanation there, or your Robinhood. I might have to go back because I was one of those scorn Wall Street bet guys. But I did make a ton of money, so I can't complain. GameStop, but I wish I would have sold it higher. In any case, so you were talking about this demand zone liquidity box. I have one drawn on my 2-hour chart, and I guess I'm just trying to understand, the top and bottom of the that zone. So I look at, what was that, the 12th? Yeah, the 12th of January, and it was
here.
Yeah, so I see there's two huge wicks, that went the whole way down to like 39. I'm looking at the MES, so 39.55, And then on the 11 a.m. on the 12th, there was a low of 39.77. So I drew my box from the 39.55 to the 39.77. And we actually, I mean, what I'm looking at now, just kind of tap that today. So how are you drawing those boxes as far as,
So,
the
so
top and bottom?
with SPY, it was actually easier to find this zone on a daily chart, and it's literally just one big candle wick. And it happened to be on this spinner right here. So we've got this whole zone as our supply zone. And then I didn't draw it before on the bottom of that, but that ties right into today's butter zone. It just narrows it a bit, but I'm using SPY instead of the ES to do that. And it's
Okay, so you went the whole way back to mid-December
right.
to grab that. Okay.
You can run it that way. There's also a gap here, so like that's why we're looking at such a volatile move. We're likely to fill that gap, and that's where I'm looking at those targets. So like you can draw the whole zone as a liquidity zone. It can be that big, but when you're day trading, those zones kind of encompass your whole chart. If you're day trading from one pivot to the next, you got to know where all the smaller zones are. You can look left on like a 30-minute chart or a 15-minute chart and find the same style. You find where the wick is. So this case, this would be a wick here. That would end up moving our zone down to encompass that wick. You know, you go to the 30-minute chart. You can find them pretty much anywhere. Anytime you see a wick, there's just a very rapid imbalance happening, and it is likely to bounce back out of that zone. That's why it gives you a definition of what the width of that whole range is in that wick. So you can go and look at the 2 hour, you can look at the daily, you can find where you're likely to encounter those zones, but it's much more efficient to find if you're day trading, minute to minute or even on a 5-second chart, knowing where the longer term zone is going to be just the next time frame or outside of the 5-minute chart. And a page out of Stone's book would be like down to the day. We'll draw the little zones, right inside a 5-minute chart. So like we had this zone right here on this little spinner here from yesterday. And that was significant to be a pivot right at the top of our gap for today. So multiple time frames, multiple liquidity zones. But know where the big ones are. So this is the daily chart here. This is the 30-minute chart here. And you can label them as such if you need to, but I just kind of eyeball it. And then knowing where the pivot is right here.
Gotcha. No, that's helpful. It's confirming kind of what I'm seeing today as far as the boxes that I drew. So I'm thinking it's gonna rebound at least up to 39.80.
And it could very well do so.
Right, I mean, that's 39.85. Yeah.
That's right where the pivot is, and this entire move that would put it right as a 50% retracement target, which we do all the time. We love 50% retracements. They're like, pretty much autopilot trades at that point. And just to briefly, I draw a lot of dope on my charts, and it gets convoluted very quickly. But mainly, I'm drawing these as I'm teaching stuff, so it's like I just leave them on there. My charts look nasty. We call it chart nasty, but the real important part is you don't necessarily need to draw these charts, and you're absolutely right. You can literally just have one indicator on your chart and then just draw the liquidity zone, supply and demand zone. That's all you really need. The whole point of drawing these is to know where the break is likely to occur that you can trade. That's the only reason why we have all these angulars and stuff, is because we know where the trade's likely to take place. Down to a daily chart, I mean, this is a mess, an absolute mess. We knew the diamond patterns. I've been teaching a lot about those. Those patterns are easy enough to see without drawing lines, but drawing lines on there when you're teaching makes sense because you kind of show it that way. It gives it a visual, something to look at. And then knowing where the rest of the zone is, knowing that this is a big ass diamond here, and it's at the base of a descending megaphone pattern, know where all the regression lines are, It just gives you all the pivot points and all the trend lines you can expect. But yeah, you're right. The chart doesn't have to be this dirty. Back to the liquidity boxes, like I was saying, any time frame can be traded, and every time frame has the same tendency to start forming patterns that you can recognize. And when I go to a 5-second chart, you see those over and over and over again at such a speed that you get a chance to develop an ability to spot those at a glance. And instead of going for swing trading and slowly learning how to spot all these patterns and how they break and how they trade, you get it much faster on a 5-second chart. So that's where the practice comes in. And ideally, if you want to learn fast how to be a profitable trader, that's a great way to do it. And out there, like you look at some of the biggest things people say about traders when retail traders are talking about, or when institutional traders are talking about retail traders, they'll say 90% of retail traders will lose 90% of their cash in a 90-day period. A lot of us call that the trader's intuition, or the trader's tuition. That's what you pay to learn how to trade. Span that out over time. That's 3 months. And if you go and start at the bottom and work your way up instead of trying to throw a bunch of loss at it, and you start learning these really short-term price action trading setups on a 5-second chart or a 10-second chart, and you get that practice really, really fast, it decreases the amount of time that you can lose 90% if you're going to throw money at it to begin with. But you're going to learn it much faster. And if you're smart, you throw just a little piece of cash at it, a couple $100 into an account just to practice with day trading and stuff like that. You'll pay less tuition. You'll learn over a shorter period of time, and you're going to offset that statistic of 90%. You're going to be able to produce much more profitable traders teaching them in a short term than you would in a long term. It's the laws of probability. All right. So as I was sitting there chattering, there's a diamond right here on a 5-second chart. There's your break. It went just above resistance. And we know two things about the diamond. One, they love to fake and then rip a face off the other way. But two, they tend to set up trend lines that end up followed as a channel, or a channel with regression line. And we've known that from both our 30-minute chart and our hourly chart. This is our diamond from here. This defined the range of the FOMC stuff that we just came through. It also defines a very interesting regression line that shows us where the limits of price are in the channel, and it shows us where the magnet is. Everything's kind of attracting to center. Well, guess what? We just made the third tap on angular support here in this channel from the onset of the diamond pattern. And our 50% target's down here at the bottom of this liquidity zone. So, yes, my chart's nasty with a bunch of angular lines on it, but they all make sense. And over time, when you learn how to trade profitably, you'll come to a point where you don't have to draw these. You can just glance at the chart, and your imagination puts them there for you. You know where they are. My whole point is to be able to give a visual and teach. So that's my excuse for having such a nasty looking chart. That was a good question on what the liquidity box is, and like I said, it's just you can go multiple time frames with it. And that's just the whole point. Build that strategy. Talking to Samuel on our YouTube channel here. Repetition is going to build your strategy, or your ability to trade profitably and utilize strategy much more rapidly. It's one thing to be able to trade a 5-second chart. but it's even greater used to be used as a tool to teach. And the awesome ability to be able to paper trade futures on a 5 and 10 second chart gives you so much experience over a short amount of time that you can just, like I said, blink at a daily chart or a 2-hour chart or a 15-minute chart, and you can start swing trading with that because you know the pattern, you've traded it before. All right, so we broke our diamond. Now we've got a trend line here. I'm going to make my chart even more dirty. Fortunately, the 5-second chart lines don't transfer over to the 1 minute and 5 minute on up charts, because that would be a real disaster. All right, I'm going to draw this in reverse. And you can see the other side of the diamond too. You can go that way for your resistance point. Take that channel up this way. You don't have to be perfect. You can always adjust it later. Whatever works. But the purpose of the diamond pattern is more than anything to define a range and give you an idea of where the trend is likely to break. And to boot, don't forget your regression line. Every time you cross that regression line, stuff happens. And I still thank Victoria for renaming this pattern the diamond fish, because it kind of tends to look like a fish. You got the body and the fins.
Diamond fish? We got a diamond fish now?
On the 5-second chart right there. Right at 12 o'clock. We've defined the range. We know where angular support is. We know where the next target is if it breaks this, and it just did. Right down here. And this is that fake and break right here. We get the fake break out and a rip down.
Fake and break.
Everything is in motion. Everything says, let's be bears. And we got a pause in the trend right on top of the demand zone.
Yeah, we could go down to 39.52.
We've kicked that pivot twice and failed.
Yes.
I mean, everything says, let's be bears at the moment.
We're going to see here. I do love price action.
What is your percentage on the road?
You're 6 and 3, and you're going to the playoffs.
There you go.
I'm sorry, I'm just cutting up. On the road, I was like, yeah, I don't know.
I was kind of trying to understand the question. This is Samuel is asking us on our YouTube channel. What is your percentage on the road? And we did have another.
Sorry, Samuel.
We did have another internal member on our Discord server. Was talking to me a minute ago. Was it? Oh, where'd he go? I think it was Shaggy. I couldn't see who was blinking when it was talking. Okay.
I had to go find it too. It was Shaggy.
Guys, it took me about a week to figure out how to actually talk on the Discords.
That's okay. I had to have
I kept hitting the unmute button. I was like, why can't anybody hear me?
We've had similar problems.
Yeah. So I finally had time this morning to look at the FAQ on the Discord and figure that out.
There you go. It's intuitive, but it's like you got to dig for all the answers anyway. So it's a great platform.
I would definitely say that you guys have been beneficial to my trading over the last, I don't know, 3 weeks since I've been listening. I do mute you guys when I actually enter a trade because it's just too many distractions. But a lot of good content. So thank you.
I do the same thing, and you're welcome.
Awesome, man. Thank you. That's why we do what we do. We want to make sure we teach everybody we know how to fish. Wow, we're striking a double bottom. That's gonna break.
We're 39.79 ish, 39.80. I think that's the a level that we had to hold on the 15th of December, about a month ago. We're below it right now. And that 39.7650 looks like we might come back down.
Break.
Yeah, if this is a pause and we've just gone through like one leg,
Right.
then we've got potential to go down another leg,
That's
and that could be far
That could
or
be.
not. So 33% of that leg would be about 39.5275 on the MES. We're going to see now because here it comes. Looks like it wants to roll back down. We had that fake out.
Right. Oh, percentage on the roadmap. Okay.
Sorry, I didn't mean to be silly when I said that. I
Oh,
hope I
no.
didn't offend anybody.
Don't worry. We cut up on here. People get us. We're human. We
I'm
love.
like Shaggy. I get really quiet when I trade because I have to focus on what I'm seeing
Yep.
till I get super comfortable. Till I can get super comfortable.
So next level, we've got probably right to the middle of that liquidity box, about 393.30. And if we can crush 393 even, we've got way more downside. Like we were just saying, that can end up being the first pause in a whole leg measured move, and that would take us right down to the bottom of the next demand zone here, which would be about 392.
I also have to watch for a double bottom here
All right.
again or a triple.
And here's that that diamond fish defining the range. There's the mid range between this guy and this guy.
Diamond fish. We got a bear fish. Now we got a diamond fish. Well, this is looking like it was going to roll over for a minute. That's why I'm checking it out. Here we got 40 seconds of this last candle. So let's see if I see any twins anywhere. I do. If depends upon how this 5-minute candle closes. You could have a twin.
Yeah. There's a couple things that
And
kind of stand out when you see these diamond fish, by the way. Middle line is basically a pivot, and that can be a point of resistance and support. And then also, one other thing, just like we drew the regression line to the bull side channel, there's a regression line for the bear side channel.
And now if we get a retracement here, we can go all the way up to 4,003 if we get a double bottom and a retracement, right? Because
Right.
we got twins. We got twin hammers. We got twin dojis, I should say, high wave dojis.
As I was drawing the other crap here was your double bottom is L1, R1, L2, R1 break, target 1, bar to the left, target 2, next bar, target 3, bar after that. Rejection here with a doji off the 200. Down she goes. This would have been a great reverse button trade right here. And back to L2 probably for an extension to the bear side before we break over. And there is one of those unorthodox trend lines here too. I mean, God,
Yeah.
my chart's looking so nasty. Oh man.
I don't care. I mean, some people are going to say, "How do you see all that stuff?" And well, I have more than one chart. And I look at some clean stuff too.
Yes.
But I'm not looking at several different indicators either. My charts are my indicators.
That's another good question. It's asking, where's my 50 SMA? I don't use one.
I use it on a daily on one chart on Webull.
It works as a good indicator for daily, but I use typically 3, and for the most part, I use 2. I call the 200 period on any time frame. It's just like a moving pivot. It seems to be a magnet for price no matter where it is on any time frame. 1. It's also a significant point to expect a reversal. The other indicators I use are just a simple 8 period and a simple 20 period. And the 20 period is always kind of stuck with me because I started out. Let me go ahead and turn this. Well, first I'm going to turn the drawings off. I started out day trading with Bollinger Bands, and I still use them from time to time. But the 20 period is the middle Bollinger Band. And it's just a simple moving average. And when you look at the 30-minute here, we've got widening Bollinger Bands, so we're accepting the volatility. Whereas when they're tight, you get less volatility. You look at multiple time frames. Okay, we exceeded the lower band a little bit on the 15-minute chart, so we're likely to get a pause, get back in the channel. The 8 period tells you where the trend is. See, we got a bull trend here. Price stays mostly above it until it doesn't. Then when it breaks it, 8 period crosses a 20. That's confirmation of a bear trend. Okay, cool. 5-minute chart, same thing. 8 crosses a 20, confirmation, bear trend. Right down we go. Bollinger Band just gives you the level of volatility to expect. And when you start to see them pinch again, you get a tightening or a pause in the trend, likely, or an accumulation zone, if you want to call it. Whatever you want to call it, you're going to see suddenly the trend slows down. So Bollinger Band's open, you get wider movement. Bollinger Band's closed, you get narrower movement. 8 period is probably the most important indicator I have on a chart. In fact, if I was to choose just one indicator, that would be it. Just the 8 period. For the most part, the price action on the 8 period is clean. It gives you exactly when it's going to break over. You know, a couple inverted hammers, good indication it was going to bar down below it right there. Came back up, tested it for resistance, and remained under it. Trap was set, down it went. To a 1-minute chart, same, only now the 20 period gets involved a little bit more. Breach the 8 period and you get a pause. Expect continuation when it rejects the 20 period. So we got a nice clean trend under the 8 period. Breached it, tested the 20, there's your pause. That's where you take your original entry, profit here or here, that's fine. And then get ready to reset the position with the same risk into a new options bracket. Run it down. I was just explaining that earlier, how to streak a trend. Right up to the 8 period again, rejected with an inverted hammer, came back under it. Here, pause, break, test the 20, reject, down, and we go again. Now we're consolidating. We got a chance at retracing half of this move. We can go and say, all right, there's a target up here at like 396.75. Just becomes much easier to spot with Bollinger Bands where the reversals are expected. Anywhere in that range, 396.75 to 397.25. Good range for a 50% retracement of today's bearish trend. Very possible. The other part of it is you can go with, you can call it the fib level to 33.3% or whatever, but I usually just go in quarters or half a leg of a measured move, whatever you want to call it. If you call this leg 1 and leg 2, half of a leg is going to be 395.75. And, you know, 2s, 3s, 5s, 7s. Those are all like all the basic fib levels you need to know anyway. Am I still on? I just had a power glitch.
Yeah, you're here.
Crazy.
I was
Like,
looking at a diamond. Look like almost a diamond pattern also on the 1 minute.
at the bottom there, yeah.
Or
Blow
head
that
and
up.
shoulders.
Blow that up. That's a diamond, sir. Good eye. Like I said, you can spot them. Once you get them practiced, man, you can spot them without drawing them. You don't have to draw on your chart. You're absolutely right, but it's a great teaching tool. And it's, if you're just starting to learn price action, draw all over your damn chart. Yep.
Interesting spot right here.
I could change my EMA, but I don't need to. It's 821 and 34 is how I use. That's isn't that similar to your Mardi Gras? Stone?
What's that?
The 8, 21, and 34.
I'm sure. No, mine's 8, 15, and 20.
Ah, okay.
And I use an SMA, but I use an EMA for the 8 and the 15.
So that is a loaded question you got there. He's like, for people who want to learn or try options trading, what capital do you suggest? Depends on what you want to do. If you're just starting to learn options, yeah, you could throw what we come up with, like a $50 account on Robinhood is enough to
Yeah,
start.
but you got to have the options 3 for that.
Yes, you still got to unlock options 3, but you could do it with a super low account on Robinhood because you're going to be trading spreads, and like risking $1 on a dollar wide, you could kill it.
But if you're Webull gives them to you cheaper, and you
Yeah.
can get that, for as little as $300 or whatever,
Exactly.
150, just single legs.
Yep. So if you're going to go and day trade options and just single options legs, or puts and or calls, you could do that for around $300 or something like that on Webull pretty successfully. And like I said, it depends on what you want to do with it. If you're just starting out, though, you're going to probably be day trading single options. Ideally, if you want to start out while still being risk averse, unlock that level 3 options. Go answer all the questions just the right way, and they'll let you have it. I'm not going to tell you how because I could be getting in trouble for that. But you can go and unlock your level 3 options trading and trade spreads, debit spreads, instead of direct options, and it cuts your risk down to about, I would say, down in a 20 percentile of compared to single options legs. And you could do a lot with very, very little risk in trading debit spreads, man. Let me tell you. Yes, this consolidation is concerning here, and it is setting up a diamond bottom, by the way. And Sig sees it too. Okay, so to finish up that, and then I'm going to sign off of YouTube because I got to go eat lunch, damn it. With options trading, it all depends on what you want to do, but inevitably, if you want to get into something where you start learning how to sell options, that's where you're going to need a little more capital. I do the wheel trade strategy, and I can practice it on penny stocks, and $1,000 account would be about the minimum to do that with. Realistically, you can do it with $200 or $300 account and be just fine. But if you go and you look at a while back on our channel, on our YouTube channel, I posted a video where I explained my CEI wheel trade strategy, where I had a zero cost inside of 6 weeks selling options on that thing in the wheel trade strategy. That you could do with a very small account. If you're trading a stock that's trading at $1 and you're able to sell weeklies on it, yeah, I mean, $200 max would be, fine. You could go and have some wiggle room with that. So like you can sell the call, you can sell the put, and you can have 100 shares long and work it. And that strategy with something like that, if everything works out, you can double your account inside of 6 weeks, essentially. Totally cool. You can go that route, but I wouldn't start out with that strategy. I would start playing with spreads first. It would be ideal. If you want to do it with single options, of course you're going to need a little more capital to work with because you're going to take some hits. But yeah, like I said, it just depends on what you want to do. All right, we're breaking support. Where is the angular from our diamond? This can be easily done with just one of those unorthodox, or what do we call them? The retro trend line.
Retro.
That takes us down into that liquidity box. That's a bear flag breaking now. It's still got a chance to retrace back and test previous support at about 394.25. But it might just break over and take a dive. And guess where that is?
Or it's a fake out.
It could be. That might put us in range of our 5-second diamond here. There's your line for the fake out. If it breaks that, cool, it'll go straight to this guy. But if it doesn't, this can bounce here right back and make a 50% retracement.
I really don't understand how to read the time in sales because I just saw an order that said that it bought 7,200 shares, but then we dumped down, even though we didn't sell enough to cover that amount of buying. I don't get it.
It's that for all you know, that could have been someone exercising a big options position. Those show up in time and sales too. They'll typically be in blocks of hundreds or thousands, but it's funny because you'll just see the price go nowhere or go the wrong way when you see something like that. That's why I don't like to look at time and sales. It's very misleading. You can look at order flow and see what the general order flow is. That does help to understand some things with smaller equities, small caps and penny stocks and stuff. But with large caps, it doesn't have the same effect because you got to realize there's a lot more options traders, which means there's a lot more market makers and institutional traders in large caps doing those things. And that changes the game when it comes to monitoring order flow.
How do you monitor order flow? Do you need level 2 access for that?
You could do it with level 1. You can get the basic pie chart. It's delayed. It gives you the cumulative for the day instead of to the minute, but you can still use it. It just ends up looking like a pie chart. You can see it breaks it down typically into 3 levels. You get your large orders, your medium orders, and your small orders, and it'll just give you a pie graph typically to show.
Oh yeah. I think I know what you're talking about. I've seen that in Webull.
Yep. That's the one I'm talking about. And it gives you a pretty good idea of what the sentiment is overall on the equity. But like I said, there's some factors in there to consume when it comes to knowing what options traders will do versus knowing what options originators are going to do. And that's why I was saying that the difference in the account size is going to be significant, whether you're going to want to sell to open options or not. Market makers sell to open options. They'll have a long position and they will literally generate income on it selling options. And that's the whole strategy right there. That's all you need to know. Trade like a market maker. Anyway, I'm going to finally sign off YouTube. It's been great talking to you guys. Thank you for joining us. And
Bye, YouTube.
We're here doing this every day. We bring a piece of it to our YouTube channel, just kind of show the public what we do on the inside. And it's just a sample. We do a hell of a lot more behind the scenes. And check us out if you like us. Tell your friends, like and share, subscribe. Helping the YouTube channel grow certainly doesn't hurt. But at the same time, our community growth is kind of at a point where we're looking for growth. So, if you want to join us, check us out. It's very, very inexpensive for the amount of knowledge you get out of us, even just joining us for a month. We'll see you guys tomorrow morning. Have a good night.
Yeah. There's the break.